Well, hello and welcome back to Master Horn Investing. This is Brian Horn. I'm the president of Affordable Tax and Accounting. Today we're going to be talking about tithing. What do you pay tithing on? Who's tithing for? What's the principle of tithing? Do you pay tithing on life insurance? Do you pay tithing on inheritances? How about gifts? How about Christmas gifts? Do you pay tithing when you buy a house? Do you buy tithing when you sell a house? How about if you have some stocks or bonds or crypto investing? We're going to be talking about some of that today. So who is this video for? Well, anybody who believes in the Bible, anybody who believes in the prophets of old. That would include all Christians, Jews, anybody from the house of Israel, all Catholics, Protestants, Evangelicals, Presbyterians, Baptists, Lutherans, Seventh-day Adventists, Jehovah's Witness, Community of Christ, Church of Jesus Christ of Latter-day Saints, the Church of Christ, Pentecostal, Reformed Church, Methodist, Orthodox, Episcopalians. I mean, it's anybody who believes in the Bible or in the prophets of the Bible. So what's the principle here? Well, in Malachi, we read, "For I am the Lord, I change not." And basically it comes down and says here, "Return unto me." Why does he want us to return unto him? Because we've been not keeping his commandments. He's saying, you need to return to me and keep my commandments. He says, if you return to me, I'll return to you. This is very important right now in these last days, as we need to be on the Lord's side, as there's this great division going on in the world, kind of between good and evil, and pulling people apart, and pulling families apart, and pulling nations apart, and pulling cities apart, and so forth. So, and then basically he's saying, well, what we say, wherein shall we return? In other words, we haven't left you. What are you talking about? That's kind of that last question right here. He says, wherein have we returned? Well, here's our answer. He says, bring ye all the tithes into my storehouse. Oh, well, the way we left is we stopped paying tithing was one of the ways. Obviously, there's other commandments we may have broken or not kept. But here he says, bring ye all the tithes into my storehouse, and may be meat in my house. So part of the reason for tithing is to be able to pay or buy food and clothes and take care of the poor and the needy and the widows and the orphans and the homeless and those kind of things. And essentially he says, prove me now herewith. He doesn't say, I'm going to prove you and see whether or not you pay your tithing and what happens. He's saying, you prove me. You pay your tithing and you prove me. And you see if I won't open you the windows of heaven and pour you out a blessing that's so great there's not even room enough to receive it. I'm going to open up my window in heaven, and I'm just going to start dumping blessings on you. And they're so great you may not receive it. Now, blessings aren't always like money. Blessings could be better health. Blessings could be answers to prayers. Blessings could be guidance. Blessings could be greater peace in your life. It could be lead you out of trouble. It could be a lot of things that these blessings are. Okay, so let's see. What do we pay tithing on here? So here's our questions we're going to kind of be looking at today. Do we pay tithing on life insurance proceeds and inheritance? How about Social Security or disability income? If I'm disabled and I'm hardly making it, is that something I pay tithing on? Do I pay, if I get a W-2, do I pay on my gross or my net? How about tax refunds? If I get a tax refund, is that taxable? I mean, not taxable. Is that tithingable? Sorry, I'm a tax guy. I'm thinking tax. How about Christmas and birthday presents, grants and scholarships that help pay tuition? Or what about student loans that help pay tuition? Stocks, crypto gains. What if I just exchange or reinvest and I don't take any of the money out? So in other words, I have like a stock and I sell Microsoft and I buy Apple, but I didn't take any money out. Is that something I pay tithing on just because I switched stocks that I'm holding? Government stimulus checks. What if my business is an S corp? What if I have an LLC or I'm a C corp? Is tithing different for a sole proprietor? What about loans I get to help start a business? So a lot of these business kind of questions I get when I'm helping people do their taxes. They start asking me these kind of questions. Do I pay tithings on things like PPP loans that were later forgiven so I didn't have to pay them back? And we already mentioned that we're going to be talking about stocks, bonds, cryptos, and other gains and losses, real estate. Okay, so here's the basic principle. Tithing means a tenth. That's what the word means. In Spanish, the word is diezmos. Diez is 10. Diezmos would be like a tenth part. So in the word, it tells us what our tithing is. It means you pay 1/10 of all your increase or income back to the Lord. I mean, everything's the Lord's anyway. We came into the world with nothing. We go out with nothing. None of it's ours. We're just stewards. So we're stewards over the Lord's property. The whole world is his. It's his footstool. So if he then gives us something, so if he says, I'm going to give you 10 M&Ms and I want you to give me one back, do we give him one back or not? I mean, that's just it. So he's given us everything we have. We may feel like we earned it because we went to work and someone paid us, but nonetheless, it's still all the Lord's, and he made it so that we could go to work, or gave us the mind so that we could create something, or helped us so that we could start a new job or our own company. So the question isn't whether you earned the money at a day job. The question surrounds whether or not you had an increase. So farmers back in the day, probably when Malachi was talking, they didn't have like stockbrokers back then. I mean, they might have had money changers and a few things, but basically, if you were a farmer, you had to go out, you had to have some seed, and you had to sow all your field, and you had to use your feed, you had to use feed to feed the animals and so forth. And then the seed grew and you had to cut it down, and maybe you had to pay people to help you cut it down, and you had to leave some for the gleaners. I mean, there's just all these things you had to do. What was your net increase after then you had to hold seed out for next year? What was your net increase? So we're looking at what our increases are. Okay. So tithing doesn't mean that you pay all your bills first and then you pay 1/10 on what's left over. That's not tithing. Tithing is you pay when you get your money, and we'll be talking about what that means. You don't go and like pay your house payment, your car payment, and your medical bills, or anything else. Say, okay, now I've got $100 left over for the month. I get to pay $10 in tithing. That's not tithing. That's just a nice little offering. Tithing means you're paying on 1/10 of your earnings, not your net after expenses. Okay, so let's look at a few ideas here. So I get some questions on, like, do I pay a tithing on life insurance proceeds? So let's look at an example. Let's suppose I have a UL policy, means it's a universal life. Universal life is one that kind of has a cash value and so forth. Well, let's say I have a universal life policy that's a $100,000 death benefit, so that stays the same. And in my premium, I started 39 years ago paying $1,000 a year in premiums. And I paid the $1,000 every year in premiums. And I passed away. My wife got $100,000 of life insurance. Does she pay tithing on that? Well, what's the principle? It's like, what's the increase? Well, if I paid $1,000 a year for 39 years, I paid $39,000 into that, or at least that'd be like my wife and I paid that. So then if I died and she got $100,000, my increase is the $100,000 minus the $39,000 of premiums. So not my increase, her increase, I died, right? So her increase is $61,000. Tithing on that, $6,100, 10% of the increase. Okay, that probably makes sense to a lot of us. But what if it isn't your spouse that died, but some distant relative that gave you the money? So what's the principle? You pay on your increase. So what's the increase in this example? They left you $100,000, and then how much did you pay into it? Well, nothing. How much did your spouse pay into it? Nothing. You guys didn't pay anything into it. So if you get $100,000, the whole thing is increased, all of it. So basically, since you didn't pay any premium into it, 100% of the amount received is increase. So you'd pay 10% of the total amount received. Or if you got $100,000, you'd pay $10,000 in that case. Now, let's suppose that, so in this case, if someone left you $8,000, you'd pay $800. If they left you $100,000, you pay $10,000. If they left you $750, then you pay $75,000. That's the increase. Okay, now let's look at if we have an inheritance. Inheritance is similar to life insurance. If you have a rich uncle that leaves you $250,000 of his estate, then that's all increase to you. None of that estate is something you helped earn or develop or grow or anything like that. So if you got $250,000 from an estate, assuming none of it was, you didn't have to pay tithing or taxes on any of it, then the $25,000 you'd pay in tithing. Now, if you received $250,000 and some of it was taxable because it came out of an IRA, for example, then you'd pay the taxes first, and you'd pay tithing on the net after you pay the tax, state and federal, and so it might be less in this case, but you have no cost basis like you did on that insurance policy of paying in $39,000. Okay, but what happens if you didn't get cash? What happens if you get gold coins, or you left a house, or you left a piece of property or something that's not really just like cash? Well, gold has a value. You could sell 10% of it and pay that as tithing, right? So it still has a value. The property may have a value. Say you inherit a piece of property is worth $700,000, and it has a loan on it for $300,000. So now you have to sell that property, and you might have realtor fees and closing costs and title insurance and stuff to do all that. And you may have to do some cleanup beforehand. And you may have to repair the roof. I mean, I don't know what you're going to do to it before you sell it. You might just sell it as is. Then you have to pay off the loan. And then what's left over, the amount that you received after all that. And if you have to pay any tithing or taxes on any of that amount, you'd pay the taxes first. Then whatever's left over at the very end, let's say there was $290,000 left over, then you would pay 10% against that value. So you may not be able to pay your tithing on that real estate or the house until it's sold, but eventually you're going to sell that, and now you're going to pay your tithing. So anyway, so that kind of gives you a little bit of idea there. How about if you have a W-2 wage? Now, some people say you pay on the gross. Well, the gross is not your increase. The gross is just the total amount you're earning. From that, you're withholding federal income taxes of $300 a month, let's say. You have state withholdings of $120. You have Social Security Medicare taxes of $236. You have $150 that you put in your 401k, and you might have some health insurance you have to pay, saying you only net $1,694. So what's your increase? Well, your increase is really the $1,694 plus the money you put in your HSA, because that's money you're going to use to help pay health insurance. That's still your money. You just happen to put it in a different can. Let's say you had a bunch of cans in your cupboard, and you were putting some money in a can to pay food, and some money in a can to pay medical bills, and some money in a can, to pay your car payment. And then when those things came due, you take money out of the can and pay it. That's a good old-fashioned way of doing it. Well, this is just putting $200 here into your health insurance can. So is this. Really, that's just health insurance. Now, are you required to have some kind of health insurance? No, you're just choosing to spend your money on health insurance. So if you have a big health event, such as like you get in a car accident, they take you in an ambulance and so forth, you're not paying all these bills out of pocket. So what you do is you're paying insurance to help you cover your costs. So this is still part of your increase. So you have the $1,694 plus the $200 plus the $300. Now, money, we're going to talk about a 401k later a little bit more, but money you put into a 401k, you don't pay tithing on. You pay tithing when you take it out of the 401k. So when you put it in, you don't pay tithing on that $150, so that's deducted. Social Security and Medicare, you never receive that. This money is taken from you and given directly to people on Social Security or on disability, Social Security disability, or to pay for Medicare expenses for people that are on Medicare. It doesn't go into some kind of a pot for you that's saved for you later. Now, hopefully, there'll still be Social Security down the road and Medicare down the road when you retire or need it or become disabled. But then when you get that money is when you pay tithing on it. Right now, it's a deduction. It is not your increase. It's somebody else's increase. So that comes off. How about state and federal withholdings? Same thing. That money is just taken from you. It's kind of stolen from you by the government, and they use it for whatever they want to use it for, giving it away to other countries, whatever they want to do with it. So that is not your increase. That is somebody else's increase. So these things all come off first. So you're not really paying on the gross or the net. You're paying on the net plus some of the items that are added back in. So that should say HSA. I think my computer did an automatic correction. An HSA is a health savings account. This is a FSA is an account that your employer has that you have to use it or lose it. An HSA means it's all your money. So even if you leave your employer, it's yours. You don't have to use it that year. It carries over from year to year. So an HSA is really a better plan than an FSA. But nonetheless, any money you're putting in is a deduction from you because that all goes to health care, whether you used it or not. Okay. So based on the W-2 example we just saw, you never pay tax on the income tax withheld. You also have not paid any taxes on any benefits you receive from the government, such as earned income credit, child tax credits, energy credits, electric vehicle credits. So on a tax return, any tax refund you get has not paid tax or tithing on it yet. Because if you deducted money from your paycheck and had it withheld, you didn't pay tithing on that because that's not your money. But at the end of the year, if you do actually get some of that back, they say, oh, you gave us too much. Okay, now that tax return would pay a 10% tithing on your tax refund. So And because your tax refund may include other things such as these earned income credits and child tax credits, some people get a pretty chunky refund, like 8-10 grand. That you'd pay tithing on. So what happens even if you get these credits and so forth, but pay additional tax nonetheless? Let's say that, I don't know, you get at the end of the year, even if you get some child tax credits and earned income credits, and you still owe $500. Well, obviously you didn't get that money. They really just kind of took it from one pocket of the government that's earned income credit and stuck it in another pocket of the government. They just put it on a piece of paper and said, you got it, but we took it back. So it was never your money. So you never received that. So if you still owe money at the end of the year, then that would be an additional deduction. In other words, you now had to pay $1,500. You would then remove $1,500 from your tithingable increase, and it would reduce the amount of tithing you would pay. So you're only going to pay on the net. So let's look at an example here. You have this W-2 that's, you have a net income of 26 for the year. That's the amount that shows on the net from the pay stub that we showed, we had from above. So then say you had interest income of $15, you had gains on crypto sales of $485. Tax due on your tax return is $396. So we take the 26, add in the $15, the 485 minus the 396. This would be our total increase for the year. That would be our tithing for the year. So we pay tithing after we had to reduce it by the amount we owed on our tax return. Okay, so tithing on Social Security income. So if you have Social Security income or disability income or pension income or something similar, the amount you receive each month is an increase to you. Because when you had your W-2, you did not pay tithing on any of the Social Security or Medicare money that was withheld from your paycheck. But now that you're actually receiving the money, it is now income to you. You're just no longer working. Someone's giving you money. It's still an increase, whether it was just gifted to you like this, like Social Security or disability, or even if you kind of earned it at work like a pension and they stuck it aside. The pension money you never paid tithing on. It just grew in a pension, and they said, okay, now when you retire, we'll give you this money. They're not giving you the money, and so that is now an increase to you. So you would add that to your income. Now, it's not how much is taxable, because on a tax return, not all Social Security is taxable. Only part of it's taxable. Sometimes none of it's taxable. But the amount you receive is an increase, and you pay tithing on it. So here's how it kind of looks. If you look at a sample tax return, this might be your W-2 money, gross W-2. Then so that you add all that up, and you add up all these lines, and comes up with this as a first net income. Then you have any interest income and dividends, and here's your Social Security. See, so the Social Security was 36, but only 20. Oops, I cut that off. 20,000 is all that's taxable. It doesn't matter what's taxable. This was your increase. That's what you received, is the 36. So we would add up the 34, the 23, the 415, and the 36 to find out what was your total increase for the year. Then we look at our taxes due. Our total tax on all that money we just earned is $5,099. On that example we were using with the pay stub, we were showing we were withholding $300 a month. That's $36,000 a year, or $3,600 a year. Sorry, $3,600. That's how much we had withheld. Well, if we owe 5, we withheld 36. We still have a balance due down here of $1,518. Okay, so that then is going to come off of our totals. So now if we look at our total, it looks like this. We have our net W-2, not the gross W-2 that was showing on the tax return. Our net W-2, the 26 from that example used on the pay stub, the $15 of interest income, the gain on the crypto sales, minus the tax due, plus we're going to add back in our Social Security, the amount we received, not the taxable amount. Our total increase for the year is now $61,000. We'd pay $6,131 in tithing for the year. So if we've been paying tithing monthly and it hadn't added up to $6,000, then by the end of the year we're going to figure out where we're at, or at some point we are, maybe in January or February. At some point we're going to get the gross, and then or what we call maybe an adjusted tithing gross, and then we're going to pay our tithing for the year on that amount. Now, what about a birthday gift or Christmas gifts or small gifts? Well, receiving a small gift is generally, don't say it's something you pay tithing on. Yes, it might be technically an increase. But if my neighbor gives me a $5 gift and I give them something back, we don't add up and minus all these little $5 gifts. These are just kind of little nice little things that we get on the side. Well, what if my wife gives me something big like a new car? Well, if she earned the money, so she's out here earning the money, then she's already paid tithing on that money. Because let's say that she had to save up and buy the car with cash. That means she's earning this money and she's putting aside $10,000 a year towards a car or $20,000 a year towards a car. Well, she already earned the money. She's already paid tithing on that money. So this money's now sitting in her bank account. So she's already earned $50,000. She's paid tithing on that money. So what's left in her bank account is $45,000. If she takes that and goes buys a car, there's no tithing on it because we didn't have any gain. We just exchanged the cash for a car. That's just like that's just if you're an accountant, you have a balance sheet. You have your assets minus your liabilities equals your owner equity. Well, what's your asset? 45 grand. What's your car asset? There isn't one. Now you take your asset of 45 grand and swap it for a car. You just have a $45,000 car asset now. There's no gain. You didn't have an increase. So as long as you're paying on your earned income, kind of in that example we just used with the tax return, then you're not going to have, just because you bought a car, that's not something you pay tithing on. But what if my rich uncle gave me a car as a graduation gift? Well, that's a pretty good size increase. That's not just like some little $5 gift for my friends or something. So that is something you could consider paying tithing on because it is an increase. You didn't have any assets. You didn't pay for it. You didn't earn any tithing on it. Now, your uncle might have paid tithing on it, on the money he used to buy the car. That's up to him. You can then decide, this is where your personal discernment comes in. You have to decide, am I right with the Lord? And if you feel like, well, that's just a gift from my uncle, he already paid tithing on that money and then just gave it to me, that could be a logical thought, and you don't owe tithing on it. If you feel like, well, yeah, but it doesn't matter what he does. I want to be right with the Lord. I want to feel like I paid all my tithing. Maybe you feel like that is something that is an increase to you. Then that case, use your good judgment and decide whether or not you owe tithing on that. How about school grants, school scholarships, and student loans? Okay, loan's not an increase to you. Remember, like that assets minus liabilities equals owner equity kind of thing. If the school gives you a loan of $1,000, you have a liability of $1,000. You owe that back. At some point, you're gonna have to earn the money and pay it back if you took the money and paid it for school tuition. So the fact that you got this money and you still owe it, that's not something you pay tithing on. It's when you earn the money down the road. You're now working, you're making 100 grand a year, and you're going to pay tithing on 100 grand. You're going to take some of that and pay a car payment, and pay a house payment, buy food, buy clothes, and pay part of your student loan. So when you pay it back, you're essentially paying tithing on the money you're earning to pay it back. So the tithing comes when you earn the money. So a loan is not something you pay tithing on because it's not an increase. So it's the same idea if you bought a house. If you borrowed 500 grand to buy a house, and the house is worth 500 grand, you have an asset of 500 grand, a liability of 500 grand, you didn't make anything. I mean, that's not an increase. That's just zero. So your owner's equity did not increase at all. And then as you earn money, you pay tithing on that, and then you make your house payment. And as you make your house payment, it pays down the loan. That's how you're paying the tithing on, is by earning the money and then paying it down. Okay, so the same idea works with the student loan. It's not an increase. Okay, so how about you go, let me give you an example here so you can see what I'm going to be talking about. Let's suppose you go to the store and there's a 50% off sale that day. So you wanted to go buy a shirt and it's 50% off. Or you're going to go buy some milk and for some reason they're having a sale, 50% off. So let's say you're going to buy $100 worth of stuff and they gave you 50% off, so you really only cost you $50. Do you go and pay tithing on the $50 savings? Well, no, that's just a discount. That's not an income to you. That's not an increase to you. That's just a less of a decrease. You just have a lower expense. So that's a savings, but it's not an increase to you. So the same idea is with a grant or scholarship. If you get a grant, so if you have tuition that you owe over here of $8 grand, let's say, for the quarter or the year, and you get a FAFSA grant of $5,900. It's really like a discount. It just reduces your tuition to $2,100. So you didn't actually increase anything. You just got a discount on your tuition. If you didn't go to school, you wouldn't get to keep it. Is all it can do is reduce the amount you owe. Similar to this sale, it just reduces the amount you owe. So generally, it's not something you pay tithing on. But again, if you want to use your discernment and you feel like that's an increase to you, then go ahead and pay tithing on it. So there's nothing wrong with that. You can always pay a little extra, even if you were wrong. You know, if you're wrong, you're wrong on the Lord's side. Okay, but let's suppose your grants or scholarship totaled 15 grand instead of this 8 grand up here. Okay, if your tuition's 8 grand, then the first of the 15,000 you received, the first 8,000 goes to pay your tuition. That just reduces your tuition to 0. But now they give you 7,000 back on top. So the 15,000 minus the 8 is 7,000. The 7,000 is given back to you. That's to help you with like living expenses, books, gas, anything. It's just an additional scholarship or grant. Well, that would definitely be an increase. So the 7,000 for sure you'd pay tithing on. You'd pay $700 in tithing on that because that was an increase. And then you can decide on the other 8,000 if that was an increase to you or not. I personally think it's just more like a discount in tuition. And if your tuition gets discounted to 0, great. Okay, how about if you have a non-IRA? So you just have a brokerage account at Charles Schwab or Fidelity or E-Trade or one of these places. And it's not an IRA or 401k. You might earn interest, you might have interest or crypto or collectibles or a lottery, something that's not in some kind of retirement plan. So basically, if you have an increase on that, you pay tithing on realized gains. A realized gains, let's say you own a stock like Microsoft or Apple or Tesla. Well, the price is going up and down all the time. It might be going up a lot at one time, and then another year it's going down a lot. You haven't sold it yet. You have not really realized a gain because by the time you sell it, you may make or lose money. So it's kind of like similar in your tax return. You don't pay taxes, at least currently, on until you actually sell it, and then you realize a gain or a loss. So if you have a realized loss, realized means it's actually sold. So like I take the stock and I sell it. Now I might sell it and buy another stock, but I just sold it. Or if I had a crypto, if I exchange it from one crypto to another crypto, so if I take, say, Ethereum and exchange it to Bitcoin, that's a realized gain or loss because I've now sold Ethereum. Whether I bought Bitcoin or not is irrelevant. I sold Ethereum, or I sold a stock, or I sold a house, or I sold something else. Then losses, if I lost money, so let's say I bought Apple at $1,000 worth of Apple, and I sold it and only got $820 back. I lost $180. That $180 is an actual loss, so it reduced my earnings or reduced my income. So now I have a decrease instead of an increase. So that then is deducted from kind of my tithing pot. So say I had a tithing can, I was putting my tithing in that can. Well, it would reduce my tithing. How about interest and dividends? Well, they'd be added to my tithing. How about crypto? Any staking income would be earnings. So we'd pay tithing on that even if we didn't take it out. If it's still in there, it doesn't matter. If you have money in the bank and it earns $50 and it's still in the bank, it doesn't matter. You earned it. You pay tithing on it and taxes. Same with crypto. Staking income, you pay tithing and taxes on that, whether you took it out or not. Crypto sells. So it doesn't matter if we sell it and take the money out, or if we transfer the coin to a different coin, or even if we transfer the coin to buy something, like let's say you transferred Bitcoin and you bought a Tesla with it. It doesn't matter. You still had that. That's a sale. That means you no longer have that same crypto. You no longer have the Bitcoin or the Ethereum or Cardano or whatever. You then figure out if you had a gain or a loss, and you pay tithing on that just like you would if it was a realized stock. Now, how about IRAs and 401k accounts? So in the example we used at the very beginning with that pay stub, we were having money coming out of our pay and going into the 401k, and we were deducting that. That's because with the 401k, you might be putting some in, your employer might be putting some in, so you have this money going into this pot. Then it's going up and down every day with the stock market and the bond market. So you never really know each year. You haven't really made that money yet. It's not usable. You can't even touch it yet. But as soon as you withdraw it, that's when you now kind of realize that money. Let's suppose you died and left it to somebody. It means you never got any of it. The other person gets it. They pay tithing on it as an inheritance. If you finally retire and you start taking money out, then you're going to pay money as you take it out. So you don't look at your balance each year and see if you made money in your retirement plan, and then add up all the money that you made and kind of say, okay, my account went up, $15,212.17, and then you pay tithing on it. Then the next year it goes down $19,000. You say, oh, now I've got to deduct $19,000 for my tithing, and the next year it goes up again. Every year you'd be kind of like, you've had years where the stock market dropped in half, and you say your 401k would have dropped in half, like back in 2000, 2002, 2008. And now 2022 to 2023, we'll have things will drop in half again. Well, you can't just keep adding and minusing every year. You just wait till you take it out. Let's suppose it went to zero. What if the account went completely to zero because you made some bad investments, like people who had Enron stock in their 401k, and they put all their 401k in the Enron stock because it was going gangbusters, and then it went bankrupt. They lost the whole thing. So you never know where you're going to make money on it. So you just pay when you take it out. So if you start taking it out when you retire and you get a monthly check, you just pay tithing on the monthly check you get. If you take a redemption out of your 401k to buy a car, you take out 50 grand, you'd pay taxes on that, then you'd pay tithing on it, and then whatever's left over you can use to buy a car. So some people, when they lose their job, they go and dip into their 401k. Well, if you do that, that's now income to you. Then you pay tithing on it at the time you made that distribution. Okay. How about tithing on a house or a home? Well, let's suppose you buy your house for $750,000. You don't go get an appraisal every year to see if your house went up or down in value, kind of like the stock market idea, to see if you had an increase or decrease in value. You have to kind of wait till you sell it. So when you finally sell your house, you can say, okay, what did I buy my house for? What was my original loan origination fee or title insurance and closing costs to buy the house? That's the cost of your house. How about upgrade you did? Like maybe you put in $92,000 worth of fencing and finished your basement and put on a new roof. And when you sold your house, you might have had costs of realtor fees, title insurance, and so forth. So your total cost basis would be the $750,000 you paid for the house, plus all the closing costs when you bought the house, plus all the additions you did while you were in the house. Now, we're not talking about furnace filters and just maintenance. This is like additions, like you finished the basement, put in a fence, put in a shed. And then when you sold the house, that was a cost to you, and as you lost that money because it's out, it's gone. So we're going to add all that up. That's going to be my cost basis. So my cost basis for buying the house is $926 grand. Now suppose I sell my house for $1 million, in this case $999,999. You take this minus your cost basis, and now you have a net gain of $73,000 on the sale of your house. Then you would pay tithing on the gain of your house, because that again is a gain. It's an increase to you. Your net worth went up $73,000 after you sold that house, or after all is said and done. Okay, how about investment examples? Okay, dividend and interest for the year, $892. Yeah, that's taxable. Staking income. Yep, we just talked about that. It's crypto staking income. That's taxable. Then you traded some of your crypto or sold some and you lost money on it. Okay, well, that's a deduction. So now the total realized gain would be the $5,208 minus the, I'm going backwards here, but the 82 plus the 36 minus the 52 makes it a negative $2,000. So it means I lost $2,115 on my investments. Let's say I sold a gold coin for $1,995 that I bought for $1,650. Okay, I made $345 on that. And I sold some covered calls, and so my premiums on the sale of my covered calls, that's income to me, was $800. And then I sold a rental property, and I used a different number than my last example. Let's say I had a rental property instead of my house. Same thing. I get to figure out my gain. That's $87,000. So what's my net investment income for the year? $85,000. Just add them all up. Tithing, $8,569. Okay, let me give you another example now. Let's say you have dividends and interest for the year, the same thing as $892, and you have the crypto losses of of 52 and stuff like you did in the last example, and so you still have, let's say, and you had losses on stock sales now because you sold some of your Tesla or your Apple stock of $2,000. How much did I make in investment income in this year? Well, I lost $6,431 because the 892 was positive. These two are both losses. So how much tithing do I pay on that? Well, a negative 643. So in other words, I'd take 643 out of my tithing bucket because my income went down, or my total net worth went down $6,400 that year. Now this would be offset. Let's say I made $80,000 of income, and I had some other monies. I'd take the $80,000 of income minus the $6,400, and I might net 72. So in this example, I'm saying, let's say my net income was 72 net. So I made 80, then I paid out my 401k and my Social Security, Medicare, and stuff. Let's say I net 72. So 72 minus my realized gains would equal $65,000 for the year. I pay $6,500 in tithe. How about in dividends or capital gains that are reinvested? Okay, does it matter whether or not you make interest or dividends or capital gains or crypto gains, but you didn't take the money out of your account? So I get this question all the time from clients to say, well, I didn't take the money out. It doesn't matter. You made the money. So if you have a stock and you sell Tesla and you buy Apple, you still sold the Tesla stock. So either made or lost money at that sell. Whether you bought another stock is irrelevant. If you own Bitcoin and you swapped it for Ethereum and you still left it in your crypto wallet, it doesn't matter. You either made money or lost money on that Bitcoin sale. You have to pay taxes on that, and it's a gain. You also pay tithing on that. So it doesn't matter whether it's still in the account. If you earned money into your bank, like interest in your savings account with $10, well, you still earned it. It may still be in the bank account, but you still made that money. So again, you pay tithing on that. So it doesn't matter. So no, it does not matter at all whether or not you left it in the account. You made the money. You had the choice to leave it in or to take it out. You had the choice to exchange it to another crypto. You didn't have to sell Bitcoin and trade it to Ethereum. You could have just sold the Bitcoin and taken the money back, stuck it in your bank account. You chose to swap it to a different crypto. That was just your choice. Now that new crypto may have gone down, but if you haven't sold it, you haven't realized the loss, then that's not a deduction yet. So if you were at the end of the year and you wanted to net that out, you'd say, okay, I'm going to swap back to Bitcoin, or I'm going to trade to Cardano or do something else, and you'd sell the Ethereum. If you had a loss on the Ethereum, it might offset the gain you had on the Bitcoin, and then that would then figure into your taxes and your tithing for the year. But if you haven't sold the Ethereum, just because you sold your Bitcoin and transferred directly into Ethereum, swapped coins, you still have a realized gain. You still pay taxes on it. You still pay tithing on it. And so if we go back to our tax return example here and say, okay, here's our wages and so forth, then what we have is, where's my other line item? Okay, let's just say it was on this line up here, this other earned income. That's not really where it goes. Let's say that's where the line item was. And if I had sold crypto, exchanged Bitcoin to Ethereum, whatever, it would just go in that line. It still add to my taxable income. So let's say again, I bought my Bitcoin at $12,000 a coin, and I put $1,000 in it. And then Bitcoin goes up to $36,000 a coin. So now my $1,000 is now worth $3,000 because the price tripled. So my money tripled. You exchange your Bitcoin for Ethereum. So now I basically swapped Bitcoin and went straight into Ethereum. So I never really sold it, just like swapped Bitcoin for Ethereum. What's the gain? Well, it doesn't matter if I withdraw it or not. It doesn't matter. So you haven't withdrawn any of it, but it doesn't matter. You still had a gain. So your gain would be the $3,000 minus the $1,000 you started with. You'd have $2,000. Well, you say, well, let's suppose I hadn't exchanged it out. I changed it directly to Ethereum, and Ethereum dropped in half. So the $3,000 is now only worth $1,500. What's my tithing? It doesn't matter. You haven't sold the Ethereum yet. So if you haven't sold the Ethereum, it doesn't matter that it's gone down in value until you actually sell it. So far, you still just have a gain of $2,000 and you have a tithing of $200. you'd have to sell the Ethereum and realize the loss on the 1,500 to offset the 2,000 in gain on Bitcoin. If you did that, let's say you sold Ethereum, in December at the very end of the year, even if you swapped it back to Bitcoin or just sold it and got cash and put the money back in your bank account, then you would realize the loss. So basically, here's that answer. Basically, so you have a $2,000 gain on the Bitcoin, you're gonna pay tithing on that, so that's gonna be $200. Whether or not the Ethereum went down is irrelevant. However, if you did realize the gain, then you'd have the 2,000 gain on Bitcoin, $1,500 loss on Ethereum. You'd still have a $500 gain for tax purposes and tithing purposes. Same formula for stocks. Now, what about a government stimulus check? Sorry, this might seem like it's getting a little bit long. You can skip around and go back and look at the parts that are just relevant to you, or come back in the future and say, hey, I got a government stimulus check. I'm going to go back and watch that video again and see the part. You can skip over to the part that's going to be relevant to you. So how about if you get a government stimulus check or something? Well, it depends if it's an increase to you or not. Again, so let's say you got stimulus money of $5,400 for your family sent to you. Do you pay any taxes on stimulus money? No, there's no taxes on the stimulus money. So you'd pay tithing on the full amount. So it'd be $540 in tithing. What about a PPP loan? Well, if you get a PPP loan, now they're not doing these anymore, but back when they did them, this you just kind of as an example, the government gives you a loan. And since it's a loan, you have to pay it back. So that is not an increase yet. Then you use it to pay your payroll taxes with and so forth. And so they forgive the loan. Now you have $16,000 in income, but you have to add the $16,000 to your income for the year, let's say. And so you still pay $2,000 in taxes on the $16,000 they gave you. That means you netted $14,222, and you pay tithing of 10% of that, $1,422. So it's the net after tax. How about if you win the lottery? So you win, not the big lottery, just a little lottery, $54,000 in lottery winnings. You're still going to have to pay taxes. Let's say your state and federal taxes combined are 27%. So you take the $54,000, you pay your 27% in tithing. You're left after tax $39,420. That's what you pay tithing on. So you pay tithing at 10%, $3,942. How about gambling winnings? Well, first of all, you shouldn't be gambling. If you're gambling, you should give it up. It's just a complete waste of money. So if you do gamble, the question is, do you pay tithing on that? You'd pay tithing on any net winnings after taxes. However, this is different from like a stock loss. If you lose money from gambling, you don't deduct it from your tithing bucket. This is like using money for fun, like going to a theme park or going to a movie or going on a vacation. That's just like discretionary money that's after tax money, after tithing money, you decided to use to go on a vacation or to go gambling or do something else or go to a movie. You just used your money. That's not something you deduct from tithing. So losses you don't deduct. But if you did make money, let's say that you had spent $1,000, down at the one-armed bandit, and you end up making $1,500 in winnings. So you spent $1,000, you won $1,500, your net increase was $500, you still pay tithing on that increased amount. How about business income? Now it's a little more tricky. Now you have business income of S corps, LLCs, C corps, but the principle is still pretty much the same. So whether you're an LLC, S corp, or sole proprietor, the formula doesn't change. A C corp is a little bit different because you don't really get the money until you take it out. And there's only two ways to take the money out of a C corp. That's either to get a dividend, in which case that's dividend income. Whatever you take as the dividend that year would be your increase. Then you'd pay taxes on that and tithing on that. If you left it in the company, there's no increase because it's still stuck in the company. You're going to use that for future company expenses most likely. Or you take out a W-2, and again, you'd pay taxes just like any other W-2 money. But on an S corp, an LLC, or sole proprietor, you're going to have earnings for the year, and the whole amount, whether you took it out of your company or not, is going to pay taxes, and it's going to pay tithing because it's still your increase. You just chose to leave it in the company. So you start with your gross income, you minus off all your business deductions, and then we might have an add back for things that are really just personal spending. So for example, let's suppose I deduct my cell phone from my business expenses. Now my business expenses might be deductible. It might be deductible at cell phone cost, might be deductible as a business expense. But I say, well, would I have had that cell phone anyway, even if I didn't have the business? I'd say, yeah, I'd have the cell phone anyway. So for me, I'd say I'm going to add that back, even though it shows as a deduction on my tax return. As far as business expenses go, I'm going to add it back and still pay tithing on that money. So I can say my gross income minus my expenses, and I'm going to add back any expenses that are really just personal spending that I just happen to be able to deduct. Maybe some of my mileage or my meals out and things like that. Let me give you an example here for 1 second. So let's look at a sample tax return now. This is kind of how you figure your income. So let's suppose I have gross income of $145,000 for my business. Then I had returns of $380. That gets deducted. Then I had cost of goods sold. This is the cost of the stuff I bought. So suppose I'm selling something on Amazon or eBay or out of a store or whatever I'm selling or doing. I have costs of doing that business of $28,000 of the materials and supplies or the goods or the books or whatever it is I'm selling. Now I take all these expenses. I have advertising costs, car expenses for driving around and showing things or picking things up or delivering things. I may have cost of labor of having people help me package stuff up or deliver it, for example. I might have bought a computer, and so I depreciated let's say that cost me $1,400. I took the whole thing as depreciation. So I have this $1,400 over here. How about insurance I have in case I get sued or I hurt somebody, or liability, or someone slips and falls at my place of business? Legal and professional fees for tax preparation or for setting up the business. Office expenses. Then let's say I rent a building, like I rent a store or something, $1,500 a month, so a total of $18,000 for the year. Then I have repairs and maintenance on things at the store, on not my car necessarily, but computers or something like that. And then there's supplies like packing supplies and shipping supplies, or things I have to use in my business, paper clips and toner and everything else. Then I had to do some traveling. Maybe I had to go down to a business meeting or a convention, and I had some meals while I was there. And then not all of it's deductible because the meals are only 50% deductible. And then I had utilities up here at my office where I pay that $18,000 a year in rent. I had to pay the utilities there as well. And then here's my phone, that $1,116. So if the net income I'm showing is $76,000, how much do you pay tithing on? Well, we're not done yet. The $76,000 is your net income or your tentative profit. I'm going to add back in my phone costs. Maybe some of these meals were meals I went out with my friends and stuff, and we talked about business, but I might have gone out with my friends anyway, so maybe for me, I'll add it back in a couple $100 worth of the meals. And same thing with that. I might add back in some of these extra things. So my net income here is 76, but that's not the end of the story. I still have taxes and Social Security tax and Medicare tax, known as self-employment tax, on that money. So let's look at the tax return. My total tax on my whole tax return is $20,000. Plus I have to add in this $10,833 here for the self-employment tax, Medicare tax on that money. So what I did here really is I took that original tax return that we had, where I had my W-2 income and the dividends and the interest and like the Social Security, and I've just added in the tax for the extra income of the $76,000. Then we minus off that $300 a month I was withholding for my W-2 wage. I still owe $27,000 down here in tax. So basically my total tax here is $20,175 on that additional income I made. On top of the federal, so I have $27,000 here, plus I still have state tax of $5,000. So the total tax now is up to like 32 grand. Let's just take a look at here. So let's say my W-2 income again was 26, and I was withholding that $300 a month from it. And then I had this interest income again and the crypto gains and sales. Now I've got the self-employment tax of $76,000, plus I still have the Social Security income of $36,000. That's from that prior example. I'm just kind of adding on to it. And I have federal and state taxes of $32,000. So let's add it all up. 26 plus 15 plus 45 plus 76 plus 36 minus 32. My total net increase for the year would be $106,000. Then I'm going to add back like $2,000 worth of expenses, like my cell phone and some meals and things like I talked about. And that's just the way I do it. You don't have to do it that way. But that stuff I figured was really money I would have spent anyway, whether or not I had the business. Just the fact that I was able to deduct it for tax purposes is not relevant for the Lord as far as I'm concerned. So my total increase is $108,000. Pay tithing on that, $10,851. Okay, so I'm an accountant and I'm a finance guy. Therefore, I think like one. But you have to remember the Lord is an accountant too. He numbers every sparrow, every star. All his creations are known, numbered, and accounted for. Thus, the Lord knows your increase for the year. So let's not rob God. You know, this whole idea of this video was to help you pay an honest tithing or be correct in your tithing and not have to, I'm not trying to make you feel guilty. So you do what you can. Let's suppose you're on Social Security income. You don't think you can afford to pay tithing. Well, the Lord said, prove me now herewith. So he's saying you pay tithing on that Social Security money and you watch if I won't open the windows of heaven. So what we want to do is prove the Lord. We want to do our part to be right with him and not rob him. And he's saying if he does that, he will open the windows of heaven. People will come out maybe to help us. Maybe our food will go farther. Maybe we'll have less medical expenses. Maybe things will be really tight for a while, but sometimes people show up with stuff and help out. It doesn't matter how the blessings come. They often come through other people. But what we want to do is find a way to be honest with the Lord and try to do our best to pay a full tithing. And if we're not there yet, let's work on being there yet. First, pay on your W-2 money, then start adding in your other stuff if you can. I mean, just kind of work your way there as quickly as possible. But it's my testimony, if we pay a full tithing, the Lord will bless us and help us as a people and as individuals and families to be on his side, and he'll help protect us in these last days, guide us, lead us out of trouble, and so forth. Doesn't mean there's not going to be hard times. It doesn't mean you're going to necessarily have more money, but you're going to have you'll have numerous blessings, so much he says you can't even hold them all. So you can share this idea with your congregation if you want to, if you are a preacher or a bishop or something, and you'd like to help your people understand tithing a little better, go ahead and share this with them. Come back and look at it in the future. If you sell a house or something, you say, how do I pay tithing on that again? You can go back and just look at that one part. So if you're any kind of a minister in the gospel or a missionary and you're trying to teach somebody about being on the Lord's side, hopefully this will help you out. You might be able to share it with them, help them out. And the goal is to be right with the Lord and be on his side in this life and be able to be with him in the next. And that's my prayer, that we'll all be able to be right with the Lord and be on his side and receive his blessings and have the joy of the Lord. And this I say in the name of Jesus Christ, amen.